Understanding your tax obligations as a North Carolina LLC owner is crucial for maintaining compliance and avoiding penalties. North Carolina has specific tax requirements that every LLC owner should know about. Limited liability companies in North Carolina are typically taxed as pass-through entities at the federal level. This means the business itself doesn't pay income taxes. Instead, profits and losses pass through to the owners, who report them on their personal tax returns. This structure helps avoid the double taxation that corporations face. However, LLCs in North Carolina have flexibility in how they're taxed. While pass-through taxation is the default, you can elect to be taxed as a corporation by filing IRS Form 2553. This election changes your tax obligations at both the federal and state levels. If your LLC chooses corporate taxation, North Carolina requires you to pay a franchise tax. This annual tax is calculated based on the greater of three amounts: your net worth in North Carolina, your investment in property or real estate in the state, or a minimum tax of $200. You'll need to file Form CD 405 with the North Carolina Department of Revenue to report and pay this tax. For LLCs with employees, additional tax obligations apply. You must register for an employer identification number with the IRS. At the state level, you're required to withhold income tax from employee paychecks and remit it to the North Carolina Department of Revenue. This process starts by filing Form NCBR to register as an employer, followed by regular withholding tax filings using Form NC5. You'll also need to register with the Division of Employment Security to pay state unemployment insurance taxes. This can be done online or by submitting Form NCUI 604. Quarterly wage reporting and tax payments are required using Form NCUI 101. LLC members must also address self-employment taxes. Since profits pass through to the owners, members pay self-employment tax on their earnings. This includes 12.4% for Social Security and 2.9% for Medicare. High earners may face an additional Medicare surtax of 0.9%. These taxes are reported on Schedule SE with your federal tax return. Sales tax is another important consideration for North Carolina LLCs. If you sell taxable products or services to customers in the state, you must register to collect and remit sales tax. Registration is done using Form NCBR, after which you'll receive a certificate of registration. The sales tax rate in North Carolina combines the state rate of 4.75% with local rates. For example, a store in Durham would charge 7% sales tax, which includes the state rate plus Durham's local rate of 2.25%. For online or remote sales, the tax rate is based on the buyer's location, not your business location. Taxable items include furniture, appliances, vehicles, physical goods, and even digital products like downloaded movies and music. However, gas, groceries, and prescription medications are exempt from sales tax. Certain services are also taxable, with a complete list available on the Department of Revenue website. If your monthly sales tax collection exceeds $100, you must file monthly returns. Otherwise, quarterly filing may be permitted with approval. Remember that you must file returns even during periods when you collect no sales tax. North Carolina offers several sales tax exemptions, including raw materials used in manufacturing, certain farm supplies, and sales to qualifying nonprofit organizations. Additionally, some industries face specialized taxes, such as lodging tax for short-term rentals, prepared food and beverage tax for restaurants, and motor vehicle rental tax. For LLCs operating across state lines, tax nexus considerations become important. Your business may need to collect and remit sales tax in other states if you have a physical presence there, exceed economic thresholds for sales volume, or use third-party fulfillment services. North Carolina follows the Wayfair decision guidelines, meaning out-of-state businesses selling to North Carolina residents may need to collect sales tax if they meet certain thresholds. Beyond tax filings, North Carolina LLCs must file an annual report with the Secretary of State and pay a $200 fee by April 15th each year. Missing tax deadlines can result in penalties of 5% per month up to 25% of the unpaid amount plus interest. The good news is that LLCs can deduct legitimate business expenses from taxable income. These include rent, utilities, payroll, business insurance, travel expenses, and advertising costs, which can significantly reduce your tax burden. Understanding these tax obligations is essential for running a compliant and financially healthy LLC in North Carolina. Tax requirements vary based on your business structure, revenue, industry, and operational footprint, so consulting with a tax professional familiar with North Carolina regulations is often a wise investment.